So Tesla is down a tad against the generally positive market, and that's for absolutely no reason that I can find. BYD has a very interesting new feature that could be a hint of the future. And then a bevy of AI related companies are reporting incomes this week, and I suspect all eyes will be on these. Some of the secondary stocks, not the Mag 7. Tesla stock will be under huge scrutiny this week as investors try to ferret out whether the SpaceX IPO is having a positive or a negative impact. I'm kind of neutral on that one, the lead up to the IPO. Some are expecting good things due to FOMO over rotation out of SpaceX by holders that get the immediate unlock on the day of the IPO. Others are worried about rotation out of Tesla into the in order to feed the special carve out of the IPO. People like you and me who might want to sell some Tesla shares in order to create the liquidity we need to buy in. There could also be some other people that would be selling Tesla on the day of or the day after in order to grab potentially momentum going up, or maybe there'll be a dip and people will buy the dip. So there's all kinds of possibilities there. As I've said, the thing I will say, and I think I'm going to be right on this one, is going to be volatility like crazy for all the month of June and maybe all of July as the market tries to figure out what the real value of SpaceX truly is. Now then, one thing I realized today is that when we see how many shares we are offered. So if you're putting in a bid, let's say, and you're going, look, I want 50 shares, and your house comes back and says, well, we can only give you two. Well, that would tend to say that the stock is at least the 30% is very, very, very oversold. Now, what if it comes back and they give you the whole thing? They give you everything you wanted. That would suggest that that 30% might be not sold out and maybe undersold. And so there could be a whole issue with regard to the entire IPO day. So that's something to watch. Check that out. I think that's information that's only going to come out 24 hours before, or maybe even 12 hours, the day before, sometime the day before. Sawyer Merritt says Tesla has already accounted for more than 10% of Canada's new quota for Chinese built EVs in the first allocation window as part of the company's new electric vehicle import framework. According to updated data from Global Affairs Canada, a total of 2,910 EVs have been imported from Canada to Canada from China under the federal government's new introduced quota system. So that would mean Tesla at about 300. Now then, from Nick 𝐒𝐮𝐧𝐝𝐚𝐲, he says Chinese automaker XPeng, some people say it's XPeng, I think it might be XPeng. Anyway, said LiDAR is no longer necessary. This is their top guy. They've adopted a camera vision approach with its new VLA 2.0 system. They also stated that cameras provide richer data per second than LiDAR, especially for end-to-end models, while noting that LiDAR can struggle in rain or fog and has power safety limitations for long-range detection. Sounds like somebody's been talking and listening to Tesla. Sawyer Merritt once again says that he quotes Robert Marks on FSD supervised after buying a Model Y. Its self-driving is the most impressively engineered consumer product since the smartphone. I say this as a practicing electrical and computer engineer professor with decades of experience in algorithms and artificial intelligence. Among others, I've shown off my Tesla to a control theory professor, a retired Marine fighter pilot, and a retired police officer, and all of them were agog. Whether Tesla ultimately dominates the future of transportation or merely helps ignite it, one thing is clear: the automobile is being reinvented before our very eyes. For those like me who grew up thinking of cars as engines, gears, and gas tanks, stepping into a Tesla feels less like buying a new car and more like getting a glimpse of tomorrow. Nick 𝐒𝐮𝐽 again. He says this is a first. Yesterday, BYD announced that they will offer full damage coverage for owners using their God's Eye Level 2 urban NOA system in China. BYD is providing one full free year of 100% damage coverage, vehicle repairs, third-party property damage, and personal injury liabilities with no payout cap and at no extra cost, as long as the system is used properly and in compliance with traffic regulations in China. Watch out for that clause. That's probably where they're going to get you. They're also fully guaranteeing coverage for owners using their intelligent parking system, their version of Tesla Summon. This is the first time an automaker has ever provided damage reimbursement for an advanced driver system. Of course, we've been saying on this channel for, gosh, I want to say probably 3 years, that once FSD is unsupervised, I don't think Tesla will have a choice. They may build it into the monthly subscription, but I think once the car is in control, as a sort of lawyer, okay, I never took the bar, as a sort of lawyer, I don't see how they can get out of providing that coverage. All right, then we've got David S. Holes. He says this. He says SpaceX put 10 megawatts of solar power in space across 3,000 generation Starlink satellites. Now think about that, 10 megawatts of power, solar power. This is what, remember, everything's solar power today. That's over 3,000 generation 1 Starlink satellites. Then they put 110 times that megawatts of space using 7,000, just a little over double of the Gen 2 version. Now then, they're going to put 1,000 megawatts, 10 times that, in space with Generation 3. SpaceX is basically 10xing space solar every few years. All right, we've got Polymarket Money with the story this morning. Says, just in, SpaceX is now projected to hit a $2.5 trillion valuation by July. Tesla Ming, I'm sorry, that was the end of that story. Yeah, 2.5 trillion. This is now basically a Polymarket that's got that estimate. Tesla Ming says that imagine Tesla, by the way, this is he did probably a 2,000 or 3,000 word analysis of this patent. I asked Grok to please bring it down to something that I could do, in a couple of minutes. Imagine Tesla rewriting the rules of battery manufacturing once again. In a major new patent, they've unveiled a groundbreaking process to produce iron phosphate, the critical precursor for LFP battery cells that are used in EVs and megapacks, mostly in megapacks. The old way is a nightmare. Sulfuric acid dissolves iron, creating messy intermediates that require endless water washing and leave mountains of toxic sodium sulfate waste. It's slow, it's expensive, and an environmental bottleneck that holds back massive scaling. Tesla's innovation throws out that outdated playbook entirely. Their engineers developed a direct synthesis method, simply reacting raw iron material straight with phosphoric acid using precise chemical ratios, no toxic intermediaries, far less water, almost zero hazardous waste. The reaction even generates its own heat up to 90 degrees centigrade, which drives the process forward and cuts energy use. They can capture the hydrogen byproduct and reuse it later. Does it sound to you anything at all like their lithium changes, the brilliant stuff that they did with the lithium refinery, last year? Holy mackerel, this sounds very much the same. Lab results show that this iron phosphate is exceptionally pure, often cleaner than today's chemical standards, and it works with cheap scrap iron. Wow. This breakthrough slashes costs, regulatory hurdles, environmental impact, while slotting perfectly into Tesla's solvent-free electrode lines. It means faster, cheaper LFP production at gigafactory scale, and also using scrap metal. Tesla isn't just building cars, they're reinventing the entire battery supply chain from the ground up. This is game-changing stuff. Okay, by the way, today, this episode is brought to you by Brian Wang, and of course, he is our resident futurist. He is a certified futurist, having scored consistently in the top, sometimes as high as I think the top 20, and more recently, I think more like in the top a couple of hundred in some of these online prediction markets, not prediction markets, but prediction websites. And so he's a certified futurist. He's also our resident genius. on this channel. And if you'd like to talk to him about what he's doing, what he's seeing, what he's thinking about with regard to some interesting investment plays, give Brian a call. This is a paid announcement. Hewlett Packard Enterprises is going to report their quarter 2 earnings after the market close on Monday. Analysts are expecting about a 53 EPS. That would be up 40% year over year on $9.8 billion in revenue, which is up 28% year over year, driven by strong AI server demand and infrastructure spending. HPE has been riding the AI tailwind with notable growth in its server and network segments, following peers like Dell. Investors will watch guidance for the rest of the year. Margins, any updates, of course, we'll be looking for what the market is saying compared to whether they beat. Credo Technology, somebody that I've never followed, CRDO, also reports Q4 2026 and full year results after close on Monday. Consensus points to a $1.03 EPS, which will be a massive year-over-year jump on $430 million revenue, up over 150% year-over-year, fueled by hyperscaler demand for its high-speed connectivity solutions critical for AI data centers. Credo has seen explosive growth in its AI-related products, optical, electrical connectivity. Focus will be on the full year outlook, whether they're going to continue to grow like this, but they're thinking about margins. So that's what you're going to look for. Now, all of these stocks I'm talking about today, not only are they the up and coming stocks, not only are they some you might want to take a look at if you'd like to have a broader than just owning Tesla as your 100% of your portfolio, but also how about the people that are feeding them? See, there's a whole bunch of companies that they use as their suppliers. Some of those might be publicly traded. Palo Alto Networks is releasing its Q3 results after the close on Tuesday. Expectations are for an 80 to 81 non-GAAP EPS, 80 cents non-GAAP EPS. This is up 28 to 29% year over year. This is going to be coming because of platformization, next generation security growth, and the recent CyberArk acquisition, boosting a cybersecurity suite. Investors will scrutinize ARR trends, retention rates, forward guidance amid a competitive security landscape, but they are definitely another growth engine. Broadcom, 𝐒𝐮𝐲 is their handle, reports Q2 full year 2026 after close on Wednesday. One of the week's most anticipated companies reporting this week. Guidance was already strong for $22 billion revenue, up 47% year over year, with AI superconductor revenue target at $10.7 billion for the quarter. That's up 140% year over year. Consensus hovers around $2.40 non-GAAP EPS. Broadcom benefits hugely from custom AI accelerators and networking for hyperscalers with a massive backlog. Key watch points: AI momentum, sustainability, VMware integration, software performance, updated full year outlook. $100 billion looks like where they're headed. CrowdStrike, also CRWD, coming out on after the close on Wednesday, following its rapid growth to over $5 billion ARR. Analysts will look for continued strong subscription revenue, net new ARR adds, and cybersecurity demand tied to AI/endpoint protection. Guidance and any commentary on platform adoption or competitive positioning will matter. The company's been a leader in cloud native security with high retention. And then there'll be a few others coming out this week. You've got Ciena. On Thursday, you've got smaller names like C3 AI or Rubrik. These are new names. These are just beginning to be seen by folks. And like I say, for every one of these new names, there are other names that are selling to them. All right, let's go ahead and take a look at what's going to happen with the various reports out this week. We have got a bunch of them. A whole bunch of them. S&P final U.S. manufacturing PMI on Monday. That will be expected to be, well, nope, they got no expectation. Last time it was 55.3, but no guess. This is manufacturing. I think it continues up. We'll see. Remember, the earlier one is an estimate. This is now the final. ISM manufacturing coming out 52.7 was last time 53.2 for their May number. So that's why I think we're going to see another increase in S&P's manufacturing numbers as well. Construction spending comes out on Monday. Also, that was up 0.6 last month. Only going to be up 0.3 this month. That seems low, even though you got to remember 0.3 is 3.6 year over year, which is not small. Then we've got auto sales coming in all day tomorrow, all day Tuesday, all day Wednesday. We'll get Ford, General Motors, we'll get the Chinese companies, and we'll see where everybody else except Tesla, how everybody else except Tesla is doing. Actually, at some point, we will get China numbers. Not sure I can't remember if we get any China numbers the first couple of days. We'll get those later. All right, on Tuesday, we get the job openings number. It was 6.9 million in March. The estimate for the jolt number, as they call it, will be 6.9 million. Again, I wouldn't be surprised to see this increasing. So hold me to that. I think it may be going up, not down. That's what I'm hearing in the hustings. Wednesday, we've got ADP employment. It was 109,000 last time. That's very strong. It's private sector only, of course. People are saying it'll be 120,000. You realize, based on my previous estimates and my previous understanding of where the market is right now, I think it's no way in heck that we're going to be at 120,000. I would be not surprised to see something like 20, 40,000. That would be more in the range where I think that on a regular month-over-month basis, that's what it's going to look like. We got S&P final U.S. services PMI on Wednesday as well. It was 50.9 on the preliminary. There's no guess on where that will be. And then we've got factory orders. They were up 1.5% on the last month on the March number. April they think it's going to be 4.3%. Now, again, think about that. That is 50% a year. So that'll be interesting to see if factory orders come in that strong. It could happen. ISM services also reporting last time was 53.6. They think it'll go up a little bit to 53.9. I am noticing, however, altogether, services are not growing as fast as manufacturing right now. That's unsurprising. In the afternoon, we'll get the Fed Beige Book on Wednesday, and I'll be reporting that probably on Thursday. Thursday, we get initial jobless claims, and that they're thinking it'll be about where it was last month, around 215,000. Again, who knows? It could be 200,000. It could be 220,000. I think it'll be in this range. Then we get U.S. productivity in quarter one. It was up 0.8. This is another quarter one analysis. I don't understand why this is still saying quarter, or maybe this is 0.8 was fourth quarter one. They're saying comes in at 0.6. And that makes sense. I think that would probably be about right. Okay, then Friday, the numbers everybody will be waiting for. Last month, the employment report came in with 115,000 jobs overall job categories. They're thinking it'll be 90,000 this month. What I'm going to be looking for is that $115,000 number to drop to about 70,000, maybe even 60,000. It's always important to go back and look at what happened last month. And the previous month to that, I think that will also be adjusted downward. And the 90,000 number, maybe, but it'll just be adjusted downward next month. But 90,000 is, as you know, not my number. 20 to 40,000 average per month, which is where we've been sitting, around 45,000 so far this year. Just can't get any more than that unless you're going to really see a drop in unemployment rate. And they don't expect that. They expect the unemployment rate to stay the same at 4.3. They expect U.S. hourly wages to go up from 0.2 in the last report to 0.3 this time, that would be good, keeping it above inflation. I know some people think inflation's at 0.3. I don't. Hourly wages year over year, they were at 3.6 last month, 3.4 suggested this time. Again, depending on who you believe on inflation, that would be better than inflation, so real increases. Consumer credit will come out that afternoon, so might be reported on Saturday. And do remember that this is the week when Cathie Wood is on, but guess what? I'm going to be traveling all day Saturday, so you're not going to get to see Larry and my Cathie Wood report until Sunday. So make sure that you subscribe and hit notify so that you find out exactly when that is. Okay, we got Truflation, the real inflation gauge here. We've got the inflation index at 2.215. That's very flat for the last week. Goods are very flat also at 4.571. We've got core, which is a little bit up at 1.283. Services quite a bit up from 0.6 all the way now over the last couple of weeks, been moving up to 0.977, but that's still under 1%. And then the PCE slightly up at 2.645, getting to the point where, no, that isn't a number that I want it to be. All right, then on Thursday, the GDP Now came out with the numbers, moving the GDP Now from 3.7 to 3.8. They will report again on Monday. I'll give you those numbers on Tuesday, probably. Maybe Monday, but probably Tuesday. All right, let's go ahead and look at Tesla. Tesla is now down $1.93. That's 0.44% on the overnights. Again, it's a little hard to understand why market. So let's go ahead and see what's happening in the other markets. We have got bonds up 1.6 back to 4.47. You've got oil heading up another $2 back to 89, still under 90. That's good. Brent 93. That's good. Natural gas up 1.70, way up, $3.35 now. I may have to ask Grok again what's going on with natural gas because it's continuing to move up. So what's happening, of course, is the Iran war continues. The Iran conflict continues. And so people are like, oh man, Trump just keeps kicking the can. The president of Iran threatened to resign again today. So all of this is telling the market, well, maybe it's not going to happen, but watch. Wait a minute. So gold's down 22.50, down to 4,570, and silver's down 0.02, still staying above 75.86. Copper is up 0.56 to 642, still under all-time high. And the dollar is mixed right now. Bitcoin down 410, but now listen up. The pre-market on the equities, Dow is up 0.08, S&P up 0.21. I think that's going to put it in all-time high territory. NASDAQ future up 0.47, almost certainly. That's 30,543.75, all-time high, I believe. Okay, so there's where we are earlier today. You definitely want to go back and look at both of the episodes earlier this morning. I did an analysis of all of the catalysts that are happening this month, a deep dive analysis on what will happen with the IPO, not only up to, but through the IPO onward. But I mean, that's the biggest catalyst of the month. Unless, of course, there is a big announcement on robotaxis, which of course we could get any day. You never know what's going to happen with that. But there was a bunch of other ones, and I did it in a completely new way this time, and it's getting massive numbers of hits. Maybe you've already seen it, but if you haven't, go back and check it out. Cern Basher was on earlier this morning. You probably want to go back and check that out if you haven't done that yet. I'll put both cards up. Now, tomorrow morning, a rather unusual thing I'm doing tomorrow morning is the Kent Marsh video from Saturday, which was an hour and 15 minutes long. Got pretty good numbers of people watching it, but it was really, really important. So what I've done is I'm going to give you a 45-minute version of that tomorrow morning around 7:30 California time. So if you didn't see the earlier one from Kent, this is an important video. I mean, this is really an important video. Maybe you want to go back. I don't have any, do I have any more that I can give you? I can give you one more card for that if you want to go back and watch the whole thing. But if you don't want to spend an hour and 15, maybe you got 45 minutes. I believe I've chopped off and giving you the most important 45 minutes of the show. So that'll be up tomorrow morning. Just to let you know, I'm not trying to double dip here, but I just thought it was important enough to give more people a chance to see that video. Very, very important. Okay. I think that's all, except of course, go down into the comments below, into the information below, and sign up to have a one-on-one with Brian Wang if you'd like to talk about some of the opportunities that he's seeing out there. Okay, that's all I got. As usual, it's been phenomenal talking to you.